Dollar index continued its bull run last week again. It yielded ninth straight bullish week, and as we discussed in the preceding week, that last to last week we can see it was a bullish candle and a breakout candle. It has created a good step and it might continue on the upside. It has achieved 105 levels and now it is very close to its next resistance at 105.5. So will it hit 105.5 any point of time next week, or we can see a little retracement and a red candles next week? Which position you should take in order to profit? Dollar index and associated currencies we will see with the help of charts first, followed with indicators. Towards the end I will give you the trading levels, strategy and the observation summary as well. Do watch till the end. Do like, share, subscribe and comment. Your every like, share and comment is a great inspiration, motivation for me to deliver on time every time to the best of my abilities and deliver twice a day analysis on major global markets and currency. Thus press the bell icon or join my free telegram channel to get the live updates. Let's see. First of all, on the weekly charts you can see it has created the bottom here and since then it is trying to stay in the bullish zone. We have discussed earlier that beyond this zone at 102.5, 103 levels, you can say more bullishness may prevail, and that is what has happened. Now it is looking forward to 105.5 as the first resistance zone, and in fact in the near future it may climb towards 108 as well. But we have seen 9 straight bullish weeks, so can it yield the 10th bullish candle again, or we can expect a pullback? Now if you look at the last two candles, see, first of all this was the breakout candle. It yielded a good bullish candle. Last week again higher lows were seen and higher highs. At the same time it appears that on the upside the resistance is very strong. You can see the candle size is getting smaller here. At the same time it has left a wick, so it has left a room for it to stay on the upside as well. See, previous candle also has a little wick on the upside, and this suggested that there is a little room for it to continue its upward journey. However, on the upside there are very strong resistances. 105 itself is a greater resistance, and then specifically I will look forward to 105.5, 106 level. This is a greater resistance. So one thing is very clear, it has still got the bullishness intact. It is, though it is diminishing in nature, however it is still bullish. We can look forward to 105.5 levels. As long as 104 is respected on the downside, do not treat the DXY as bearish as of now. Below 104 only little bearishness can be seen. However, we have to still be watchful and cautious. Now this is just purely on the weekly charts. Let's also have a look at the daily. Now look at the daily charts here. See, first base is created at 104, rise, retracement, again higher lows, and then this is stronger bullish candle. Now after the stronger bullish candle, what has happened? It is just a consolidation which has happened here. It is neither a bearish candle nor a bullish candle. It is a candle of indecision. Now if again it gives a breakout of above 105.2, you can expect, certainly we are looking for 105.5, and this can get achieved in a single candle itself, and this is certainly a very good resistance. You can find out the resistance here at 105.5, then earlier the resistance here at 105.5. So yes, it is going to remain a critical resistance level, and if it stays above 105.5, I will look forward to 107, 108 levels. If not next week, possibly with some point of time in near future, these levels might get achieved. Now if you look at the formation here, you will find, see, higher lows, higher highs, staying in this bullish channel. So now as long as 104 is respected, do not treat the DXY is bearish. This is very clear. 104 is going to remain a very good support. In fact 103.7 levels, this zone is completely a great support, because below that directly it will lend towards 103. Chances are less that this is going to happen in this week or possibly in month of September, that it is going to go below 102.6. This is the strongest support, and I do not see it breaking below these levels any point of time soon in the month of September. Now let's have a look at the monthly. If you look at the monthly chart, see, most importantly, after creating lower lows here, now it is looking forward to breach the resistance zone. You can see multiple candles here getting the resistance and getting reversal from the same levels. Now also if you note here, see, after consolidating here for months, the DXY is now looking upwards. This suggests that possibly the up move might continue here for a while. And when I say up move might continue here for a while, see, this is still staying strong. This is still staying bullish. I will wait for it to break past 105.5 levels, and then certainly more bullish momentum may prevail here. Now this candle is a breakout candle. I will just wait for 105.5 to be breached, and then it can yield stronger bullish candles in the coming months. I will definitely observe where it closes this month, and then possibly next month can be equally stronger candle be seen. You have to be careful here what it is trying to do. You can look at this. See, DXY is trading in this bullish channel since long, and now it is reversing from the median of the channel. I will wait and watch if it tries to attempt and achieve towards the top of the channel again. See what has happened here: retracement, again the top of the channel, and then the retracement, and again the top of the channel. If not top of the channel, at least see, even if it is bearish, you can draw a parallel, and once you draw a parallel channel, so even if it is bearish, it can try to attempt and achieve this zone at 108, 110 in the coming few months. And these are very, very achievable levels. Possibly this month it may try to limit somewhere here at 107, 108 zone. 108, 110 is definitely an achievable level in the next month. So yes, it is looking upwards. It is trying to give a breakout. It is trying to stay bullish. Now let's have a look with the help of indicators. Now indicators on the monthly, you can find out the prices were divergent from the moving average. We can see the convergence, we can see it consolidating. In fact, it has touched 50 months average for a while, and then now looking upward. So yes, it has consolidated here for a good time. Now it is looking upward. So bullish still. Also the moving averages are running parallel. This is also a good sign for the bulls out there. Look at the stochastic. This is rising, this is looking upwards, this is staying bullish. At the same time, see, this is only the caution point that the bull run might continue for maybe this month or next month, maybe achieving 108, 110 zone, not the top of the channel. Why? You can look at the answer here. See, the DXY stayed bullish here. It has achieved the highs, and then this crossover is. Now what has happened post crossover? First of all, this is where the previous crossover was in 2015, 2016. You can see the same divergence. It has converged here, it is converged here. Now it is trying to converge. That is what is happening right now. This suggests that possibly a couple of candles or more we may see it crossing over, or we may see it achieving the, or you can see the zero levels here before looking forward to diverge. Now what has happened here during this convergence? You can see higher highs are achieved. So this is something, maybe it will take a couple of months or more for it to stay bullish, and then the down move may resume. And hence, yes, right now it is staying bullish. For a couple of months we have to be careful with the short entries, with the sell entries, and then we will look forward towards the end of the year how it is going to behave. Possibly the downside is still wide open for DXY, and it has to continue on the downside, but before that it is trying to retrace. RSI rising. Coming to week, on the weekly charts, moving averages are on the verge of a crossover. This is the 20 and 50 period moving average, and this is stationed at around 103 levels. Very, very good support levels at 103 exists. 103, 104 zone is something you should watch out for. In fact, rather I will say 102, 104 zone. This is going to be a great support zone in any case if the DXY shows a down move. Now also, if you look at the top of the Bollinger Band, this is right now limiting at around 105.4. Thus, as I say, these are definitely 105.5 is definitely a great resistance, and it is going to remain a great resistance for next week as well. So be cautious at around 105.5, 106, and it can show you pullback as well towards the end of the week. It can try to move downwards towards 104.5, 104 levels. Stochastic is overbought, which calls for a possible pullback here. But look at MACD. See, MACD has crossed over here, and it is almost triple bottom which is formed before now looking upward. So this is still divergent, it is still bullish, it is still long room to go. And this also confirms with our observation on the monthly charts that it suggests that the next couple of months still there could be bullishness in DXY, and you can look forward to 108, 110 levels in the coming future. In fact, it can pass by 110 as well. We have to observe more carefully. Yes, there is bullishness. Yes, it can continue on the upside. RSI is rising. This is again a bullish sign. Coming to the daily chart. Now on the daily chart, see, the observation here is the divergence of the price, the top of the channel, resistance here. The support from the 20 period moving average is 104. Yes, the prices are divergent from the 20 period moving average. This calls for a little conversion, and we have seen it earlier. We can see it here. We can see it again, but there is one more probability that it can try to achieve the highs before looking forward to a pullback. Yes, the moving averages have crossed over. These are trading with divergence. These are still looking upwards. This also makes 104, 103 levels as a great support zone. Stochastic is rising. MACD. Now look at MACD. This is flat. this is staying flat, and this is at a critical resistance level. It does not mean that it cannot achieve or scale to the highs here. Right now it is precisely at the median, and these are the previous highs from where it has reversed. So this is a caution zone, and this also justifies our resistance levels at 105.5, 106. RSI rising. So now we have seen the charts, we have seen the indicators. Time for me to define the levels, strategy, and summarize the observation from the complete analysis. But before I give you the summary, observation, and the analysis, yes, if you want to learn this art of trading, you should join my mentorship batch. The 26th batch is going to start on first week of October. Limited seats are available. This is purely on the first come first serve basis. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. First, let's talk about the levels to buy. I will recommend you to buy here at 105.2, or rather, yes, this is a safer entry, and then next we can look forward to 105.5, 105.6 levels. This is the very strong resistance zone. You should note, you should watch out, you should be cautious, you should be alert of these levels. Beyond this, directly it will lend to 106.05 and then 100. See, beyond 106, the bullish momentum may continue to gather. However, the chances of pullback will also remain strong. The question here is whether this rise happens at the beginning of the week or towards the end. The chances for it to rise happen towards the end of the week, but 105.6 levels are achievable sooner. Now, beyond 106.5, directly it will try to land at 106.8, 107.15, and then 108 levels. This is the next stronger milestone for the dollar index here. This is very, very important. This is very crucial. 107, 108 zone is going to be the next milestone here, and these levels are very critical for the DXY. Now on the downside, one can sell here at 104.8, and then below that 104.4, 104. Now 104 is going to remain a very, very, very strong support level. So this is the zone 104 to 105.6, which is a caution zone for us. Below 104 itself, the first and nearest resistance is at 103.8. So this is, rather I will say, even 103.8 you should be watchful of, because below 103.8 the chances for it to achieve 103.2 and 102.9, 102.5 levels will be very, very strong. These are great resistances on the downside. I still doubt that the DXY is going to break so far, and I still have my reservations, my apprehension for the DXY to crack at those levels. But yes, these are markets we have to observe carefully. Another important observation here is, see, this is fundamental observation, this is macroeconomic observation. See, the dollar rising, the oil price is rising, and this is putting an extra impact on major economies who imports oil on the dollar prices. Now remember, this extra impact which the economies are having definitely will have a dent in their economic outlook, and yes, the inflation which the economies are trying to fight is definitely going to become a serious concern from them in the coming future, and thus we may see this outlook of oil and dollar index rising together in the economic strength of major economies in the near future. So thus we have to look at the larger fundamentals in the coming future, which can have an impact on indices and commodities. So take your trades accordingly. With that, let me conclude. Take trades accordingly, trade with a stop loss, trade with a trailing stop loss. Do like, share, subscribe, and comment. Join my mentorship batch, join my signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Stay tuned with the twice a day analysis of major global markets and commodities. Thank you.